Hello class, welcome to week number 5, and today's discussion is the preparation of the worksheet and the financial statement. A worksheet is an accounting tool. It is a columnar that looks like this, and it might be 10, 8, or 6 column. This helps the accountants or bookkeepers to easily prepare the financial statements even before adjusting entries are posted in the journal. It is not mandatory. Indeed, it's just optional. Why? Because out of the trial balance, financial statements can already be prepared. In this presentation, we'll be using 10-column worksheet. As you can see in this slide, this is the standard format on how to prepare this accounting tool. First line here is the trade name, and if there's none, the name of the proprietor. Next line is the type of the report that we are preparing, so it is worksheet. And third is the period covered. The column here provides for the accounts. Others use the account titles, it's alright, but I preferred in this discussion accounts. The worksheet provides for 5 major sections. We have here the unadjusted trial balance, adjustments, adjusted trial balance, income statement, and the balance sheet. Under each section, we have 2 columns for debit and credit. These are our imaginary account titles with their respective balances. As you can see, we have an arrow here, wherein this will be explained soon. This unadjusted trial balance represents those balances of these account titles before adjusting entries are prepared, while these adjustments represents our adjusting entries. This adjusted trial balance is the combination of these 2 sections, the unadjusted trial balance and adjustments. The balances here and the adjusted trial balance are extended either of these 2. The basis of this is according to the elements of those balances. Remember our discussion when we discussed the components of the income statement? We have 2, the revenues or income and expenses. While for the balance sheet, we have the ALU, the assets, liabilities, and owner's equity. We'll just have a problem to deeply understand on how to prepare the worksheet, and this is our problem. Here is our problem. We're given here the account balances of Anivine Consulting Services prior to the December 31, 2020 year-end adjustments. Here we have the account titles with their respective balances and also the data that needs adjustment at year-end. And we are required to prepare a complete worksheet and the balance sheet and the income statement. Now we're ready to prepare the worksheet. First thing to do is to write the trade name, and if there's none, we have to write the proprietor's name. Alright? To be followed by the type of report that we are preparing, and the third line is the period covered. After which, we're going to write the 5 sections of the worksheet. We have there the unadjusted trial balance down to the balance sheet. After that, here under the column A, we'll write the accounts or account titles. Under each section is the debit and credit. Alright. The next step is to copy as is the accounts and their respective balance. But first, we have to take a look if the sequence here is presented according to the accounting elements. Remember our acronym ALODRE. A stands for assets, L liabilities, okay, OE is capital, D drawings, revenues, and expenses. So it's alright, it's presented accordingly. But please take note that in the assets, current assets must come first. So it is alright, to be followed by the non-current asset plus the contra asset account. After that, since we are sure that everything is presented accordingly, therefore we're going to copy this one. We're going to write it there in our worksheet. Here is our account titles and extend the balances in the debit credit columns respectively. That's it. So, this is our balances posted under the unadjusted trial balance. Next thing to do is to test or to put the total debits. All right, you have to range that one from cash down to miscellaneous expenses. It's 37,000, and we will copy the formula. All right, it's balanced. That's the time that we're going to double rule that one for the finality of figure, and we'll write the description totals. Okay, now we're ready to analyze the transactions that need adjustment. First is the accrued salaries. So the debit here is the salaries expense. So take a look if there is an existing account title already. So there we have salary expense. So we have to write here letter A to indicate that this is our first adjusting entry. So the debit is 2,500, and we will credit a liability account accrued salaries expenses. Alright? So there is no existing account here, so we have to write. But before that, we have to write here the adjustments that this will indicate that below here is our account titles arising from our adjusting entries. So we have here the accrued salaries expenses. Okay, the spelling is wrong. Okay, so that is adjustment letter A, 2,500. The purpose of this putting letter A is that to counter-reference later as to our posting. Alright? So that's it. Next one is the provision for depreciation. We have there 2,000. We don't need to compute anymore because this is already provided in the problem. So our entry would be debit depreciation expense. So since there's none, we have to write here depreciation expenses. Okay, this is our next adjustment. So letter B. The debit is 2,000. Alright. And the credit, of course, is accumulated depreciation. So there you are. So that is letter B. To be written under the column of the credit. Alright, let's continue. Expired insurance 1,000. So the pro forma entry here is debit either prepaid or expense account. To make sure, you have to take a look if there is a related account title pertaining to insurance. So we have there prepaid insurance. Therefore, when the company paid the expenses in advance, the company uses the asset method. So therefore, we have to decrease it by 1,000. Why? Because this 4,500 is overstated by 1,000 because 1,000 already expired. So therefore, we have to decrease this by crediting prepaid insurance. So the debit would be insurance expense. So insurance expense or expenses. So that is letter C adjustment. So the amount is 1,000. Alright. So credit prepaid insurance. So that is letter C. So credit 1,000. Let's continue. Unearned revenue earned during the year. So look for the related account title. We have there unearned revenue. Therefore, the company uses the liability method in initial recording of pre-collections of income. Remember our discussion about the adjusting entries. Alright, so to decrease this one, we have to debit this one. So our entry would be, that would be letter D. So debit unearned revenue by 1,000, and we will credit revenues earned. So that is letter D, same amount, 1,000. The last one, office supplies on hand, 600. Take a look for a related account title. We have there unused office supplies, 6,000. So this 6,000 at the end of the year is not true anymore. So it's not valid anymore. Why? Because the balance that should be presented in the balance sheet should be 600. So this is overstated by 5,400, or that is 6,000 less 600. So therefore, we have to recognize the used office supplies, or we can use the account title office supplies expense. Okay, so that is our letter E adjustment. So the amount is 5,400 and we will credit here 5,400. Alright, after that we're going to put the total debits, okay, to test if it is equal with the credits. So we have to put that one up to cash, okay. So we'll do the same in the credit column. Alright, so it's balanced. So therefore, we're going to double rule this one. And we will copy this. Alright, so totals. So now we can proceed to the column or to the section of the adjusted trial balance. To do that one, okay, we're just going to combine the unadjusted trial balance and the adjustments. Okay, we'll combine this one. If the amount have the same column, they are added. Since it has no other amount in other columns, therefore, we simply extend it in the debit column under adjusted trial balance. Okay, so you can have that figure. So let me make this a bigger one. Okay, so it's visible. Alright, let's continue. Unused office supplies. We have here debit and we have credit. So it's not possible to sum this one, but to sum up this one, but we have to deduct the credit from the debit. So 6,000 less 5,400, we will have a debit balance of 600. Why debit balance? Why it is posted under the column of debit? Because debit is greater than the credit. Now let's continue. No other amount, so we have to extend that one. Private insurance, so we'll do the same. So debit less credit, so 5 less 1,000, so 3,500 debit balance. The office equipment, so no other information, so just extend. How about the accumulated depreciation? Okay, so we have here same column credit. Okay, so we have to add that one. We have to combine and we have to write it under the credit column. For the accounts payable, only once extend under the credit column. And earned revenue, so credit minus debit, so credit balance of 3,000. For the capital, okay, just extend. For the drawing, we'll do the same. For the revenues earned, so both is credit, so pause it under the credit, so you add it one. For the salaries expense, both debit, so add that and pause or write under the debit column. And this one, no other data, so you just copy the values or you just extend. Alright, of course you don't need to extend the totals. If you do that, you'll be committing a grave error. Right, let's continue. For the accrued salaries expense, so just extend. And this one, okay, just extend. Okay, so after that, we're going to test its equality. So we'll just copy the formula. So that's it. It's balanced. All right. So now we are ready to extend this adjusted trial balance amounts to the appropriate or to their corresponding financial statements sections. Okay, just a sort of review, the components of income statement is the, or rather are the revenues and expenses, while for the balance sheet, it's the ALU, the assets, liabilities, owner's equity, and the drawing. So cash here up to drawings account will be extended under the section of the balance sheet. All right. And this one up to expenses will be extended under the income statement. Alright? Accrued salaries expense is a liability account, so it will be extended in the balance sheet. These three our expenses account so will be extended under the income statement. Alright, now we're going to put the total debits and credits of income statement in the balance sheet. We'll just copy this formula or to show again how to do it. So you have to sum it up from the, okay, so, okay. So you can have shift plus arrow up or simply drag through the mouse. Okay, enter. Alright. So we'll do the same. What you can observe here, class, is that it's not balanced. Let us try to get the difference because in the bottom we need to have 19,400. So the difference here is how much? Okay, 900. And the difference here is how much? Okay, we'll do this one. Positive less 22 100. What you can observe, class, is that the difference is just the same. And we need to have a description of this. Try to take a look to the total of debit under the income statement. This is 19,400, while the total credit representing revenue is only 18,500. Therefore, the description of this must be loss or net loss. Alright, so, or it might be explained in this way. It is debited here because later it will reduce the owner's equity account of the business. Or to make it simple, okay, just to get the right description, again, just compare what is the greater amount under the income statement. Is it the credit? If that is the case, if this is greater than the total debit, then we can have profit or income. But if, like in this case, the total credit is greater or lesser than rather our total debit, therefore we have to list description loss. And of course we have to write the description here totals because we're going to sum, we have to sum it up, we have to put, okay, and we have to do the same. We'll just copy the formula. Oh, so you see it's balanced, so we did it right, so we need to double roll it. All right, so I successfully presented to you the worksheet. So this is our worksheet. Now we're about to prepare the financial statements. Okay, first we're going to prepare the income statement. All we have to do is just take a look at the income statement section of the worksheet. Likewise, if you are to prepare a balance sheet, we just take a look at the balance sheet section of our accounting worksheet. Now let's do it together. First, we're going to prepare the income statement. As you can observe, class, the three sections, the unadjusted trial balance, adjustments, and adjusted trial balance were hide for the purpose of saving the space. Okay, income statement. The first thing, of course, is the name of the company, followed in the second line is the name of the report that we are preparing, so it is income statement. And the third line would be the period covered. Take note that if we are preparing the income statement, it must start with these words, for the. So it can be for the year ended December 31, 2020 or like this one, alright? Next thing is the revenues. Because all we know, the components of the income statement are the revenues and expenses. Okay, revenues can be seen here under the credit column under the income statement section. We got only one, revenues earned. So you have to write it there with its corresponding amount. Next is our operating expenses. Again, take a look in the income statement section of the worksheet under debit columns. All of this, okay, will be written here with its corresponding balances. Okay, so we have to total this one or sum it up. The total is 19,400. Get the difference and have a description. Since revenues earned is lesser than the operating expenses, definitely we have net loss as same here. Alright, now let's continue with the balance sheet. So we're going to prepare again of course, the name of the company, type of report, and take note class, it starts with as of. It connotes continuity, alright? So, that's it. First is our assets. It is presented according to its sequence, okay, as to its liquidity, okay? So it will start with the current assets. So take a look with the accounts under the balance sheet section, okay? We have all the debits here except the drawings. So all of these are the assets, alright? So we got here the cash. This is current, current, current asset, alright? Okay. So, all of this will be written here with their amounts and we have to sum it up. So, the total current assets, okay, is 9,600. For the non-current assets, we have only one and of course, it's contra asset account. So, we have to write it there and you get the difference to get the net book value. It should be deleted here. My apology, okay? Why? You don't need to have this one because we already describe it here less. So there is a description already. So we have to sum it up, current assets plus non-current assets. So we get total assets of 12,600. Now let's proceed to total liabilities and owner's equity. For the current liabilities, okay, we got only 1, 2, and the other one, 3. So again, so it looks like this. And total at 1, it's 9,000. For the owner's equity, we have here the capital and the drawing. So it's presented here. So beginning, that amount, drawing, okay, and the net loss from the income statement that we showed a while ago. That's it. Alright, so we get here the owner's equity balance at the end of the period, okay, 3,600 and add the liabilities and owner's equity, so the figure is balanced. Total assets is 12,600, total liabilities and owner's equity 12,600. Maybe some of you will ask, why is the format different to the previous presentation? Okay, so you can do it like this way. You can have a separate statement of changes in owner's equity covering the period ended December 31, 2020. Okay, so as like we have presented a while ago, so just capture this one, write it there in the statement of changes in owner's equity, and this figure in the bottom representing our capital balance ending should be presented here. So the total is just the same. Thank you so much for watching. Hope that you learned a lot about the preparation of worksheet. First, we started with the writing of all the sections in the worksheet, alright? Okay, and then we post as is the amounts under the column of the unadjusted trial balance, after which we post all the adjustments. The next section is the adjusted trial balance. Then we have the last remaining sections, the income statement and the balance sheet. Thank you so much for watching. Up next is the closing entries plus the post-closing trial balance. If you want to be notified, you may subscribe. Thank you so much.